Welcome to ForexTV.com. Today's Monday, May 11th. I'm Tim Kelly with the New York Forex Market Buzz. Dollar is stronger against the euro and the pound, but weaker against the Japanese yen at midday. Dow and the S&P 500 are lower, while the Nasdaq is up by a fraction. Oil and gold are also slightly lower. Today we're joined by Steve Leahy, president of BackbayFX. Hi, Steve. Thanks for joining us today.
Hey, Tim. You're very welcome, and thank you for having me on. As always, it's a pleasure.
Steve, we jump right into our discussion today, and that's because we from a currency standpoint, I don't see too much news moving the markets today, and I think we're looking at maybe you and I taking a look at some technical levels and trying to understand what we have on tap for the week. We left off last week. You and I, the last time we spoke, it's about 2 weeks ago. You were long euro. That was a pretty good call. We had a bit of a discussion about some of the risk trades and perhaps seeing them gain. And they, of course, in hindsight, we can see that they did gain. Right now, we're looking at a week that doesn't have a whole lot of information in it, Steve, until we get to the end of the week. As you indicated a little earlier before we came on, PPI, CPI, and the Treasury International Capital data coming out. So why don't we take a look at euro? I know you've got some thoughts on short term for euro for the rest of the week, of course, and love to hear what you have to say about that.
Sure. Well, again, thanks for having me on, Tim, and it's always a pleasure talking to you before and during the interviews. Good insight. But yes, I did send over just a couple charts. We were looking at these this morning. Helped us out with a position. We've been long euro for some time now. On a kind of fundamental basis. We also had a shorter term position on that we picked up a more long euro as of Thursday morning of this past week. When we came this morning, there'd been a pretty decent pullback overnight last night, and just kind of trying to figure out what we were going to do. And I pulled up two charts and I sent them over to you guys. Those two charts are a 2-hour candlestick session with some Bollinger Bands on there, and a 30-minute candlestick chart with some Bollinger Bands on there. And you know, the two things that really caught our attention and kept us in this long euro position were that on the 2-hour chart, you'll see euro seemed to be heading towards a midline on the Bollinger Bands. Whenever you're in a real trending market, which euro has been for the last 4 days or so, midline support on some Bollinger Bands we have historically seen to be a pretty good support level. But always we like to cross-reference different time frames. And so that's why I also sent over the 30-minute chart, slightly shorter, a little bit choppier, but similar to seeing the midline support on a 2-hour chart. When I looked at the 30-minute chart this morning, we saw that euro is really close to the bottom of its Bollinger Bands, not the midline, but the actual Bollinger Bands on the 30-minute chart. And both those levels were about the same level, right? So the midline of a 2-hour chart and the bottom band of the 30-minute charts we're right about the, I think about the 135.40 level or so, and that gave us some conviction. We thought that we'd stick in this thing and make sure the 135.40 level held, and we thought that was our test. So far, it has, and you know, I guess the reason I sent those over to you, Tim, is that no one trades in a vacuum. There's all sorts of different information out there at any given time, but specifically for technical traders, you know, technical analysis is a bit of a self-fulfilling prophecy. If everybody out there were watching the same set of parameters, same indicators, they would all see the same thing and would all buy euro at the same time or sell euro at the same time. And again, it's a self-fulfilling prophecy. I guess my point here is that by looking at two different set of time charts, I've overlaid what two separate sets of traders are looking at. We happen to think that the 2-hour and the 30-minute chart people are pretty decent-sized volume traders, and that's why we use those two parameters and kept us in a long position.
Okay. Well, Steve, on Friday we went over the 200-day moving average for the first time in a while in euro, and it's since come back a little bit. The 200 comes in at 134.68. What would be your view if we don't hold that 200-day moving average? Would that? And I know you're looking at the Bollingers in this situation.
Yep.
Would that change your perspective at all? I'm just going to take a quick look. We're trading just below the 136 handle right now.
Yeah, we're up below 136 right now. So basically, we've got about 140 points or so, I think, till you know the 200-day moving average. You know, to us, we do think euro's trending up strongly here at this point in time. 200-day moving average certainly is important. I've always, me personally, thought it more important in equities than currencies, just because equities tend to have a end of day, whereas currencies do trade, 24, 5.5, as I say. I do think in the kind of immediate term here, if I had to be long or short euros, well, in fact, I do have to be long or short euros. We're long euro, and I expect we'll be higher by the end of the week rather than lower. That being said, your moving average, the 200-day moving average, correlates pretty well. Obviously, I use Bollinger Bands myself. Looking at a much longer-term Bollinger Band, I got that same level here, right about the 134. I say it is 134.52 as my midline support in this trending market. And as I said earlier, when we see a currency pair trending pretty strongly, which euro has been for the last 2.5 weeks here, we view the midline support as a real critical level. And so, to tell you the truth, now that you bring up the 200-day moving average, I think that a break of that level, which corresponds with the level I'm looking at, would really certainly give me pause for consideration, and would think would be probably looking to go short the euro if we can cross that and hold it, not on a minute-to-minute basis, but if we cross and break below that level and then hold it for 24, 48 hours, then we'd probably have to. I'd change my view and look to go short.
What would you, Steve? You talk about a horizon for this week that you certainly want to be long. Do you have a target on the long euro position?
The target for us on the long euro position at this point in time. Well, I don't have a goal in mind where I'm going to take profit. I know that the next level that I'm looking at that had previously caught a lot of attention, meaning that there was a lot of buying and selling, some volatility, was right about the 137 to 137.35 level. So really, I think just 100 to 135 points from here, we get back into some levels that we last saw right in the middle of March or so. There was a big run-up about March 19th or so. We saw euro go from below 1.300 up to this 137 level. And so that to me indicates, that's where there's going to be some more action, some more buying and selling. So I think these historical levels where there have been a lot of activity are natural gravitational points for euro. And so at this point, as we're trending higher and higher, it makes sense to me that we'll certainly visit that 137 to 137.35 level.
Okay, so your gain loss or your upside downside is about 150 points. So it's about a 1-to-1 on this euro trade. If we reach that 137 handle and go above it, or if we go back to the 200-day moving average. So your position right here is kind of a 1-to-1 for a take profit and a stop loss.
Yeah, and I guess 1-to-1 doesn't sound that great. The only caveat being we've been long this euro for a couple days now. So at this point, in a way, I'm playing with house money.
Right. I was of course, Steve. I know you actually last time we were in, you're probably a little bit above that house money there. So, but just for those for this leg of the trade, just wanted to be sure on that. But I know you did call that correctly quite a while ago. Steve, is there anything else that, in terms of currency pairs that you want to address? And then I wanted to talk to you about, maybe event risk for the end of this week. We don't have any kind of releases that are going to move markets or traditionally don't move markets that dramatically. So I want to get your thoughts on the next event upcoming. But before we do that, what other currencies are you looking at? Do you take any information away from where dollar yen is trading, or perhaps where some of the risk trades like CAD or Aussie are trading right now down?
I do think, interesting, Tim, similar to some points you've noted in the last few conversations we've had, the commodity currencies have had a great run over the last, I'm going to say 3 months or so. And so wouldn't be surprised to see the commodity currencies give that back a little bit, although, truth be told, I thought the U.S. Equity and kind of global equity markets were overbought as of a week and a half ago or so. And so I guess the tough part is picking your points, right? Trying to get reversals is always a dangerous game. It's always easier to go with the trend. And so I do think, though, that we are going to look for some weakness in the commodity currencies. And once that is confirmed, be it fundamental or technical analysis for us, we'll jump on that short commodity currency trade. And then the last trade of note, as you point out, dollar yen, we do think that dollar yen comes off here a little bit. Mostly correlated with the carry trades. We do, and we've been saying it for a week and a half now. We think the rally in global equity is a little bit overdone. We think the carry trades highly correlated, and therefore we think the carry trades come off, and therefore dollar yen comes off.
Right. I think you know certainly today we're seeing equities come off, and the commodity currencies still have that correlation pretty strongly. We saw that last week was quite strong, a little bit more pronounced than in weeks prior and even months prior. So Steve, we'll finish up talking a little bit about the next event risk for euro, perhaps for some of the risk trades.
Sure. Yeah, as you mentioned, there's really not a heck of a lot of news coming out these first couple of days of the week. So some of the models that we use, the quantitative models we use, we've shifted to a much more short-term trading strategy rather than long-term trending. We just think that over the next 2 or 3 days there'll be a lot more kind of technical range-bound trading. But speaking of risk events, you know, towards the end of the week here, we are going to have PPI, then CPI, which will be interesting to see what's happening here in the U.S., especially, the final event is going to be Friday morning, 9 a.m., the tick data, Treasury International Capital. We're going to be real interested to see who's been buying and who's been selling U.S. Treasury securities, specifically as we've seen yields rise. We watched the 10-year note clearly well above the 3.0 level, which it hadn't seen in quite some time, and it had a real quick move higher. So yields have been going higher. Prices have been selling off. It'll be interesting to see if the real big players, the foreign central banks, have been selling these selling treasuries into the real rally that we had over the previous 3 months or so. So that's really the event risk for us. You know, it'll be U.S. dollar based. I don't see anything else out there on the horizon that's really getting my attention until Thursday morning, then Friday morning.
Okay, Steve, we're going to leave it there. Thanks so much for joining us.
Thank you for having me on, Tim.
This has been your New York Forex Market Buzz with Stephen Leahy of BackbayFX. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.